Hello, this is John Smallwood, President and Senior Wealth Advisor at Smallwood Wealth Management. Today, I want to talk about the concept of life insurance over the age of 50. Do I still need it? Should I have it in my retirement? What are the benefits of life insurance? What are the different types of life insurance? How do life insurance policies work? Senior life insurance. There's a lot of misconceptions out there as to whether or not life insurance is needed in retirement. A lot of the training in financial services was designed that you don't need life insurance in retirement. And one of the things that we always talk about in the financial planning process is that when you hit past 50 and you get into what we're going to call the final end of preparing for retirement, you make it to retirement. Now the chances of death are at the highest that they've ever been. And I say that jokingly because, the older we become, the more likely is that death is going to occur. Not that death doesn't happen sooner, but death will actually happen. It's the only thing that's pretty certain that it's going to happen. Okay. So the teaching has always been, I don't need life insurance in retirement because all the big expenses are behind me. And what I find for people in retirement is upon the first death, the first spouse to die, you lose a Social Security. You may have a pension calculation change, a pension payment might be life only and there's no payment. It might be reduced by 50%. You might have free health care from your employer's company that you no longer have. And we don't know what the outcome prior to death was. Did you end up at a nursing home and burn up a whole bunch of money that you didn't have long-term care to protect against? What were the circumstances? Did inflation and tax erosion, mess with the plan that I have? Did my term life, expire before I expired? Did the rate go up so exponentially? I was just meeting with a client the other day, a new prospective client, and the term rate's going to go from $600 a year to $14,000 in 3 years, and he was not aware of that. So what I wanted to do was take a minute here and to just kind of outline life insurance in retirement is probably one of the most important assets that we have. And when you think about life insurance, you have term life insurance, you have universal life insurance, and you have whole life insurance. Term is a rental that will become more expensive. And the older you become, the less that you can lock the rates down for, the less time frame. And when the rates expire, either on a 10 or 15 or 20-year term, you're now 75, 80 years old, those premiums become exponential. The insurance company wants you off the books at that time, is what I'm basically trying to say here. Universal life is a low-cost version, a little bit more expensive than term, but in theory, it's supposed to stay around for a long time. And what we're seeing is universal life that's old or that's not being managed properly. The cash values are running out of these contracts, and when that happens, the policies will lapse. In many cases, they will terminate prior to the client terminating life. Whole life insurance is sort of a unique asset that it has many features that make it or help you enhance your retirement income because of its permanent nature. There are guaranteed cash values, and then there are dividends that are paid on those cash values. Those dividends can be taken out of a policy tax-free until you reach your basis. The cash value can be accessed either via surrender or a loan for emergency purposes. And that death benefit is typically rising, and many companies now have what's called an accelerated benefit rider that allows you to access the death benefit prior to death for if you're terminally ill or chronically ill for whatever benefits and features that you really want. Okay, so this is really an exciting thing, but the idea is that if I know I have permanent life insurance in play, there's many ways in which I could also use, the death benefit to enhance my retirement income by taking pension maximizations, by doing charitable remainder trusts, by doing immediate annuities or annuitization of products, all designed to increase income. The goal of a retirement plan, the goal of any financial plan, is to decrease taxes, decrease risk, decrease fees and costs, increase retirement, and pass more to your family. Bringing life insurance into a plan, into a big picture strategy, will truly allow you to find ways to potentially enhance your retirement income above and beyond traditional strategies. And this is one of the goals, is always to be thinking macro, so that you can look at how is this life insurance going to increase the retirement income? How would it work in my particular plan? I just named a whole bunch of ways that it might be able to help you, but until you look at it in your planning, you look at some insurance quotes, you look at the rates and how they're assessed, and you take an exam and understand, will I be preferred or super preferred or standard or substandard? What's the age in which I can get this? These are things that are super important to making a decision, but you don't want to be fooled like the rest of like a lot of financial plans out there, is that you don't need life insurance in retirement. Life insurance is going to be an important part of any good retirement plan to help maximize the retirement income and pass the maximum to your family. Most people, that's what they want to do. I don't want to trade off for one for the other. I want to have both. So this is something I think is really important. I urge you to reassess how much life insurance will you have, when will it be paid for, when can I start to generate income from it, when will my term insurance expire. I don't want to be surprised by getting a bill in the mail when I'm 70 years old that my term rate just went up 10 times and I'm no longer able to convert that policy without the conversion right to transfer that policy from term into permanent also terminates at certain ages depending upon your policy. But once that opportunity is over, you'd have to go take an exam again. And as we all know, we may not be as healthy as the day we took that policy out. I encourage you to refocus, rethink what really is happening. Did I have as much success in my plan? Could I have more success in my plan, in my retirement plan? But making sure that we're keeping track of your life insurance, how it's going to help you increase the retirement, protect more of your wealth, and pass more to your family is really what you want to do. I look forward to talking to you. Thank you. Talk to you soon. Welcome to the end of the video. Smallwood Wealth Management is an investment advisor representative. The opinions expressed by Smallwood Wealth Management and guests on this show are their own. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented for this educational purposes only. Moreover, no listener should assume that any discussions or information presented serves as a receipt of or substitute for personalized advice from Smallwood Wealth Management or from any other investment professional, and is not intended as an offer of solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Smallwood Wealth Management is not a law firm or an accounting firm, and no portion of this presentation should be interpreted as legal, accounting, or tax advice. Information expressed does not take into account your specific situation or objectives and is not intended as a recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Thank you for listening.